Hello again, I'm Sue Lloyd, Vice Chair of the ISSB, and I'm back to close with some final remarks in the last part of this webcast series. We've certainly covered a lot of information as part of this series. I'll use this time, during our closing remarks, to share information about how to access the Materiality Guide and recap some of the main messages. There is, of course, plenty more in the 62 pages that were not discussed in these webcasts, so I really encourage our stakeholders to spend some time reading the Materiality Guide. If you're like me, listening to the webcast can be a good way to get an overview that then makes it easier to read the document. I'd highly recommend that you download the Materiality Guide and read it. You'll find more examples, including examples on interoperability and connectivity, and overall, it will complement the messages we've covered as part of this series. To access the Materiality Guide, please head over to the IFRS Foundation website. From there, you can hover over IFRS Sustainability, and under Using the Standards, you'll see Application Support, which is where we house our educational material. You'll find the Materiality Guide listed in two places, under IFRS S1 educational material and under IFRS S2 educational material, because of course it underpins all of our standards. We've also included a link to the Materiality Guide on the web pages that house this webcast series for ease of access. This slide basically sets out the table of contents from the Materiality Guide. We've spent a good deal of time going through each chapter. One thing I do want to point out are the appendices. These include some additional information that will be useful to those applying our standards. For example, Appendix A goes through the use of IFRS S2 to identify climate-related risks and opportunities, and includes many examples of climate-related risks and opportunities. I'd like to conclude my opening remarks by recapping the main messages from each chapter. In Chapter 1, we learned that ISSB standards are designed to result in the provision of information that's useful to primary users of general-purpose financial reports. The definition of material information in the ISSB standards focuses on whether information could reasonably be expected to influence the decisions that primary users make on the basis of general-purpose financial reports, which include financial statements and sustainability-related financial disclosures. And primary users are existing and potential investors, lenders, and other creditors. Materiality is entity-specific, and it's a characteristic of information. ISSB standards set out requirements that an entity applies in preparing sustainability-related financial disclosures. The ISSB standards require information to be provided when it is material. This means that when an entity applies the standards, the information they have to provide is what is material for that particular entity. In other words, the definition of material information is really used as a filter to assess whether information about a sustainability-related risk or opportunity is essentially important enough to meet investors' information needs, that it needs to be provided by a particular entity in order to meet the requirements in the ISSB standards. And when making materiality judgments, an entity needs to assess whether omitting, misstating, or obscuring information could reasonably be expected to influence the decisions that primary users make about providing resources to the entity. In Chapter 2, we learned that IFRS S1 describes the concept of sustainability-related risks and opportunities, and that this description includes the consideration of several different things: an entity's interactions with stakeholders, society, the economy, and the natural environment throughout its value chain, the resources and relationships throughout the entity's value chain, dependencies and impacts on those resources and relationships, and sustainability-related risks and opportunities that arise from those dependencies and impacts. Main Message 5 highlights that an entity applying the ISSB standards identifies those sustainability-related risks and opportunities that could reasonably be expected to affect its prospects. And its prospects are its cash flows, its access to finance, or the cost of capital over the short, medium, or long term. In considering what could reasonably be expected to affect an entity's prospects, the entity needs to consider an external perspective. That is, what would an external party reasonably expect? And here in Main Message 6, The ISSB standards don't require that an entity use a specific approach or method to identify sustainability-related risks and opportunities, but the standards do require entities to consider specific sources of guidance to make this assessment, particular standards and frameworks that are used to identify these sustainability-related risks and opportunities. These sources of guidance are intended to help entities in this identification process. For example, to identify such risks and opportunities, IFRS S1 requires entities to refer to and consider the SASB standards, and our climate standard, IFRS S2, requires entities to refer to and consider the industry-based guidance on implementing IFRS S2. Finally, in Chapter 3, we learned that once an entity has identified its sustainability-related risks and opportunities, it will need to identify and disclose material information about those risks and opportunities. The ISSB standards don't require an entity to disclose all information about those sustainability-related risks and opportunities. The standards are designed to result in an entity providing information that's useful for decisions that primary users of general-purpose financial reports make using the information, and it's only material information that an entity is required to provide. That which, if it was omitted, misstated or obscured, could reasonably be expected to affect the decisions that an investor could make on the basis of the sustainability-related financial disclosures. And the materiality guide sets out an example of a process that an entity might follow to identify and disclose material information. Now, people are often confused about whether the ISSB requires information to be provided about impacts. ISSB standards do require the disclosure of information about how an entity's activities impact people and the environment when those impacts give rise to sustainability-related risks and opportunities that could reasonably be expected to affect the entity's prospects. In fact, IFRS S1 explains that an entity's dependencies and impacts can give rise to sustainability-related risks and opportunities that could reasonably be expected to affect an entity's prospects. An entity will need to understand its dependencies and impacts to identify sustainability-related risks and opportunities. Information about both dependencies and impacts could be material to primary users in order to understand the sustainability-related risks and opportunities that could reasonably be expected to affect an entity's prospects. And disclosing material information about that is what's required to meet the objective of the ISSB standards. With all of that, I'd like to thank you for joining us. We hope that this webcast has been helpful and that you find the materiality guide really useful.